All right, now the South African Reserve Bank is this afternoon set to announce new interest rates. It's expected that rates will be hiked. Let's hear what economist Tertia Jacobs predicts. Tertia, thank you very much for your time. I mean, every time I see Governor Tertia Jacobs' face, I literally panic as a person who has loans, etc. What are your predictions this afternoon? Is it going to be bad?
Well, Maseko, I think, we do expect a rate increase. I think the key focus point is perhaps by how much the Reserve Bank is going to hike the repo rate and what the context is. How concerned are they about the current rate of inflation and the outlook?
But what are your predictions? How much do you think it's going to go up by? Because I think you agree with many economists that it's definitely going to go up. What are your predictions?
Yes, our view is more in the minority, where we expect the Reserve Bank to raise the repo rate by 25 basis points. The majority is for a 50 basis point rate hike.
So what would, you advise South Africans who, for instance, have loans as big as home loans, for instance, that, go up and down according to what the Reserve Bank says? What would be your advice to them? Should they try and call the banks to try and get a loan that is more stable, or that where you pay the same amount all the time, or will they lose out once it stabilizes and goes back down?
Yeah. You're talking about going variable or fixed rate.
Yes, that's correct.
I think where we know, Maseko, is, last year the Reserve Bank raised the repo rate by about 350 basis points. It was much faster than what we anticipated in the beginning of the year. So I think where we're standing now is that we're very close to the peak of the rate hiking cycle. And I think that can transpire over the next, either today can be the final rate hike, depending on how inflation performs going forward, or there may perhaps be one final rate hike in March, but we're very close to the peak. So I think from that perspective, households should start to consider what the fixed rate is and what the average variable rate over that period would be.
All right, so that's where I was coming, actually, in terms of what you think the trajectory looks like. Does it look like, at least in the next coming months at least? Because last year, I think around November or October, when I spoke to one economist, he said that we would be seeing increases for another year. So that would mean until October this year. But you're saying that we are almost at the peak. What do you mean by that? Do you mean soon enough we'll get to a point where it at least stays at the same rate?
Yes. I think that is the view, Maseko, because when you look at the inflation trajectory, so inflation peaked at 7.8% in July last year. In December, inflation moderated to 7.2%. So we expect the downward trajectory to actually accelerate in the first half of this year, reaching 5% by the middle of the year. So that means that the Reserve Bank can actually go into a hold mode in coming months, as inflation will do all the work, which will lead to higher real interest rates. And the real interest rate is the adjustment where you look at the nominal interest rate and you subtract inflation. So that negative real rate has been actually negative up to now. So I think as it turns more positive, the Reserve Bank will step away from hiking.
But because of what's been happening right now, do you get a sense, as you sit there at Investec and you discuss the economy, etc., do you get a sense that the South Africans are actually losing hope in the concept of economic growth because of what's been happening in the last year or so?
I think that is a very important point. Because of the intensification of the load shedding. And, we know that many of the small businesses are under extreme pressure. They can still manage it, say, up from stage 2 to stage 3. But to have stage 4 to 6 is becoming increasingly challenging. So I think the focus here is actually what should happen on storing electricity. And we know that the Ramaphosa government is busy with looking at at some of the aspects. We just know that we need more urgency in whatever they're doing, because otherwise, business and consumer confidence are sliding, and that then becomes a kind of a self-fulfilling dynamic. And then on the other hand, you have the Reserve Bank that has to combat inflation, because, when inflation, for example, become entrenched, or expectations become entrenched at 7%, that also becomes like a self-fulfilling dynamic, when the wage price spiral becomes more embedded when inflation expectations become embedded in the price wage spiral. So South Africa is actually at a very challenging point when you look at the mix, or the confluence of dynamics.
And I mean, this time it's not necessarily all our doing, right? I mean, the entire globe is going through, what some economists would call a technical recession, although some economists don't necessarily agree. But what's the trajectory that you're seeing in terms of, borrowing individually as South Africans? Are you seeing more people taking loans, especially, home loans or car loans, or even those small little loans? Or, is the economic trajectory of this country stopping people from actually even approaching the banks?
Look, the credit cycle is closely linked to interest rates. Yeah. So when, during 2020, when the Reserve Bank cut rates aggressively because inflation allowed them to, there was quite a substantial pickup in, mortgage advances and car loans. Those sectors did quite well. But one would expect, as, interest rates have increased, as debt servicing costs to become higher, that demand for these loans will start to moderate.
Yeah. Well, I think a lot of us will be waiting at around 3 o'clock or 4 o'clock when the Reserve Bank governor makes that announcement, and we'll all be praying in our own little homes. Thank you very much for speaking to us, economist at Investec, Tertia Jacobs.